How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down the top stocks that I'm looking to buy heading into this week in the stock market. And I also want to break down with you guys what to watch out for heading into this week, as this week is arguably the most important week in recent history. And let me tell you why. We have big tech earnings. We'll go over those in a little bit here. We're going to get more insight around the stimulus, the trillions of dollars that probably will get passed through Congress here. It could be 1 trillion, 3 trillion, right? We'll get more insight around that. We have GDP numbers coming out. We have a Fed meeting this week, a two-day Fed meeting with Jerome Powell speaking on Wednesday. So there's a lot going down this week, and you guys better believe that it's going to influence the stock market, whether it's higher or lower, right? And we're also going to break down the futures and kind of what happened last week in the market and a couple of levels to just keep an eye out on when it comes down to the S&P. So jam-packed video today. If you guys find value in it, as always, hit that like button for me. Check out all the free links down below in the description box if you want 2 free stocks, if you want to join our Discord chat and our Facebook group. And without further ado, let's just get right into it. So last week was a pretty interesting week. I mean, if we break down this 5-day, 5-minute chart here, we can see that, all right, we started off the week at about 3220 on the S&P. We rallied up that day to about 3260. We popped up to about 3280. We were smooth sailing on the 21st, on the 22nd, and then the 23rd hit. We hit 3280. We failed breaking out of that the 2 previous days, right? And we ended up collapsing. The market, S&P 500, went down from 3280 all the way down to about 3230, and we tried consolidating and breaking out from that level, but ultimately failed doing so. Then the next day dropped down even further, which puts us to where we are right now, between $3,200 support and resistance around 3220. And taking a look at this intraday chart, it's very obvious that that is where we're trading. I mean, take a look. In the morning on Friday, we hit 3,200, bounced, popped, leveled out at about 3220, bounced back down to about 3200, held it, rallied back up 3220. We double topped and we dropped from there heading into the close. So this is going to put us in a range, and we're going to see what direction the S&P picks. And right now, the futures seem to be up. Actually, they were up a bit more before, about 10 minutes ago when the futures market opened here at 6 p.m. Eastern Standard on the East Coast. But now that they actually seem like they're falling. So just keep an eye on the futures, guys, and especially on the S&P, 3220 on the upside and 3200 on the downside. Because if we break out of 3220 and especially out of 3227, which was the high from Friday, we might be going up higher. I mean, that could trigger some bullish momentum. You know, you guys can see this is simply a pull down in the grand scheme of things on the S&P. So if we take out 3220 and eventually 3230, that could be a one-way ticket back up to 3280. And of course, if 3200 breaks, we might be gapping down to 3180. That's a big level here. 3150 as well. And then 3120 is another very, very big one. And just, guys, watch these futures heading into the morning. Watch large caps. What are they looking like? Are they gapping down? Are they popping up? That should give you a sense of how the market is going to do, at least in the beginning of the day. Anything can happen. A lot can change. I mean, don't just rely on the futures, of course, but just use them kind of as a tool in your tool belt for kind of strategizing for the upcoming day and the upcoming week. That's kind of how I use it, the futures, and that's kind of how you guys use it as well. I know that just from speaking to many of you all. So let's just get into some more details here about what's going on this week. And actually, before we do that, it's earnings season, guys. About 26% of the companies in the S&P 500 have reported second quarter results, according to FactSet's John Butters And we can see here, if I pull up this preview, this is Earnings Whispers. They don't sponsor my channel whatsoever. I just literally screenshotted this off of their Instagram page. Go follow them there. I mean, if you guys want, these little pictures here that show all the earnings and the companies, it's pretty good stuff. I mean, if you're a visual person, go follow them. At Earnings Whispers, I think, is their Instagram. And this is what we have this week. Monday is not too exciting. It's not too exciting. We have SAP. We have a bunch of, not low-level companies, but low-covered companies, let's just put it that way. Bank of Hawaii, RPM, NXP. Then on Tuesday, we start getting a bit more, fancy with the companies. More people know these. Pfizer, AMD, McDonald's, Visa, 3M. eBay, Starbucks, Altria, Raytheon. This is going to be big, guys. This is more exciting in terms of earnings than last week, at least in my opinion. Wednesday, we have Shopify, Boeing, Facebook, PayPal, right? Afria, Spotify. We have, on Thursdays, the big day, UPS, MasterCard, Amazon, Apple, Alphabet, Kraft Heinz, Procter & Gamble. Then on Friday, we have another pretty solid day of earnings. Exxon, AbbVie, which is a company that I'm invested in long-term, more of a dividend growth play there. We have Pinterest, Caterpillar, Merck, Under Armour, Chevron, Dominion Energy. So a lot of energy on Friday there. And that's what it's looking like, guys. We're going to talk about all these stocks all week this week, so make sure to subscribe to the channel if you haven't done so already. We'll break down all of their earnings throughout the week, but this is what is on the schedule. I'd love to know what you guys are watching in particular down below in the comment section. Now, let's talk about a little bit more some of these stocks individually, and a little bit more about what's going on and what to watch out for this week. And again, stimulus. This is a massive, massive thing to watch out for this week. Republicans, Democrats, they're going at it. They're trying to figure out kind of what number they're going to pump into the economy here, whether it's $1 trillion, $3 trillion, $2 trillion. I've been hearing all around the spectrum there. And you guys know the unemployment, the benefits here are ending any day now. I think it's end of July. So they're going to need more stimulus. And what happens when money gets put into the economy, guys? This is basic economics pretty much. We're going to see more money into the economy, whether it's $1 trillion, $2 trillion, whatever, and that's going to pump up asset prices. That's going to end up deflating, or actually in the long term, it's going to cause inflation. And that inflation here is going to end up popping up the stock market in the short term, right? As more dollars are being pumped into the economy, more people are going to flood into assets. And that's kind of, more people are going to flood into assets, and the prices of those assets will go up. That's why they say the rich get richer and the poor get poorer when there's money stimulus, when there's money printing, because it's a sad reality, but it's true, because, the poor demographic, they don't have much savings, and their savings in general get dwindled down as inflation kicks and as money printing occurs. But the rich, on the flip side, who have assets, again, as money gets put into the economy, assets go up. These rich people, their money grows. Their money grows as money gets pumped into the economy, while poor people, their savings get dwindled away due to inflation. They don't have investments, so they can't benefit from that. So that is kind of a little rundown there on what the stimulus is going to do. At the end of the day, guys, it's going to push asset prices higher. We're talking stocks. We're talking gold. We're talking real estate. So watch out for all of that. People say don't fight the Fed for this reason exactly. And the truth is, it's not 100% guaranteed returns. Always do your own due diligence. Always do your own research. Of course, anything could happen, but the principle is that asset prices will get inflated if we get another couple trillion into the economy. And GDP numbers. On Thursday here, we're getting Q2 GDP numbers, and the forecast right now is about 35%. A 35% drop. Consensus economists expect that GDP for April through June sunk around 35%, which is insane on a quarter-over-quarter annualized basis. And Fed meeting, guys, 2-day Fed meeting. I'm not sure if it starts on Tuesday. It might start Tuesday, and then Powell speaks on Wednesday, but we're going to watch out for kind of the monetary policy, of course, any maybe tweaks to that, whether he's going to go negative interest rates, raise the interest rates, which throw that option out the window. It's not happening. We saw him say he's not even thinking about raising rates. So at this point, all he can do is stay at zero or go negative. And we're probably going to see him say the Fed rate is staying at 0%. There's not going to be much change, but either way, it's going to be great to see what are his thoughts on the economy, how we're recovering, and so forth, and plans for the future, of course, with more, bond buying, money stimulus, what are the plans in general, right? That's kind of what we're going to hear from them, Tuesday, Wednesday, or Wednesday, Thursday, whatever the 2 days are. I'm forgetting off the top of my head, but either way, that's what to watch out for this week. Jam-packed week, guys, and of course, do more research into all of these different topics that we just talked about to get a broader perspective, right, and to get more in-depth into the nitty-gritty as well. And let me know down below in the comments, what are your thoughts on everything that we just talked about on the stock market in general. Now let's break down finally some stocks here that I'm looking to buy heading into this week. Some of these, actually just one of them, I own in my swing portfolio, and that is Msft, also known as Microsoft. So at this point, Microsoft, they reported good earnings. They beat on EPS, they beat on revenue, and we're used to seeing Microsoft, especially from at least 2 years ago, 3 years ago, even the past year, guys. We're used to seeing Microsoft destroy numbers. I'm talking 20% beat, 15% beat, whatever. And this time, they didn't destroy numbers by any means, but they had a pretty solid earnings report. And the stock has fallen from peak here, $216, down to about $200. That opened up a 7% window on Microsoft. So I'm thinking the stock ended up overreacting to that earnings report, dropping around 5% there after earnings the day after as well. And I'm thinking that we're going to recover. Ultimately, on this 4-hour chart, on the 6-month chart, that is, we're holding the 180 SMA, this gold line that we've held in the past couple of months. Ever since the recovery started, every time Microsoft has pulled down, whether it's a couple percentage points, 7 percentage points like this time, we've recovered, we've rallied on top of this moving average. So I wouldn't be surprised, guys, if we did pop and break out here. And again, watch out for these futures. They're currently turning red. NASDAQ is turning red right now. The Dow Jones futures are red as well, down about 0.1%. S&P futures are down about 0.1%. So not much movement there. They're pretty flat. But just watch what direction these futures go to, especially in the pre-market session. And going back to Microsoft, again, this is one of them that I'm in right now, the only one that I'm in. I'm in around $200.50, right in that general area. I picked up some shares on Friday here, and honestly, my goal is to swing trade them up to 210, 212, 215, that general area. And again, that should give me a return of about 5 to 7%. So I'm watching big tech in general this week, guys. I mean, we had Microsoft report last week. The next stock I want to talk about is Apple. Hit about $400, dropped to $370. I mean, this is a $30 per share drop, roughly 8% in potential profit. That's what the 30-point drop equates to. And a lot of people are saying, hey, Apple's going to beat. Apple's going to beat their earnings. All these companies are going to beat earnings. Only time will tell, guys. But one thing that you can't deny is each tech pull down, I mean, it's proved to be a pretty strong buying point. Not trying to get you guys to buy, not trying to convince you. I'm just trying to make you look at the charts and think. There is a bit of fear here in the markets. There always is a bit of fear, uncertainty, especially these days. But you have to realize each time we've pulled down, I mean, we've recovered. And if we end up holding, let's say, 370 tomorrow on Apple, popping out to 375, 380, and start rallying, I mean, I can easily see this thing going back to 400. And if they kick earnings out of the park, they may be going up above $400. And am I going to buy and try and gamble on an earnings play here? No, that's not my style. I'd probably buy into earnings, maybe lock in profits, wait till they report, and then maybe hop in after earnings again if that deems like a good idea, if it seems like a good idea. But typically, guys, you know this if you've been following me, I don't like jumping in before earnings. But either way, Apple from 370 to 400, it's looking very attractive. Amazon as well, guys. AMZN, Amazing Zon, whatever you want to call it. This is down about $300, $340 actually per share from its peak. We're holding the 180 SMA on the 4-hour chart. Very similar to Microsoft, very similar to Apple. That's what you'll realize as well. A lot of these tech stocks, they look very similar when it comes to the technicals. Other than Netflix, that's the only one that's a bit different. Actually, no, it's not. It's also holding the 180 SMA on this 4-hour chart, and this is also one that I'm in right now at $490 per share, looking to swing trade this. So ultimately, I have my money in some tech plays right now. I have a lot of cash as well in anticipation of these companies' earnings reports, waiting to see what happens after them, because I like having cash, in case of a bigger drop. You guys have to be prepared. Cash is the way to prepare, especially, if you have a good amount sitting in the bank. I mean, it could go to better use in the stock market, especially like we talked about earlier with the money printing. That's going to cause asset prices to go up. I mean, it's basic fundamental economics here. So we see Netflix potentially rallying at 480. We'll see what ends up happening there. Google is another one that's pulled down to the 180 SMA on this 4-hour chart, holding about $1,500. Tesla is another one, TSLA. It hasn't gotten quite yet to the 180 SMA, but we saw a pretty big drawdown on Friday, down about $100, almost 6.5%. And quite honestly, guys, I'd pay the stock market gods for this. I would love for Tesla to get to $1,200. I mean, I'd do anything for that. Maybe not anything. Maybe let's not get carried away, guys. But for $1,200 Tesla, I would definitely buy there, and I'd be willing to do a lot for that. Let's just put it that way. So, if we get a $1,200 Tesla stock price, I'd probably start scaling in, as a swing trade. And if we get anything close to 1,000, I'd for sure be starting to scale in as a swing trade. And another big one here, it's a gold miners stock. And this is not talked about a lot, but it's Newmont Corporation. Gold stocks, gold has been crushing it. Gold stocks in general have been crushing it. And speaking of gold, I mean, the gold futures are up $10 right now, up over $1,900, 1907. Take a look at this rally, guys. This is unbelievable. Silver as well, /SI. Silver, even more impressive, guys. It's up 2.2% right now, the futures. They're up about 50 cents. So watch these gold stocks. I know they're not the most, exciting stocks. They're no tech stocks, but they're good stocks. I mean, they're speculative, kind of, more on the price of gold and kind of where our economic system is headed. They're a bit speculative, but there are some good returns there to be had, especially if you are, crafty with your entry points. And as always, again, like I say, guys, do your own due diligence, do your own research. Do not ever buy or trade a stock based off of my opinions. So watch gold, watch silver here, watch Newmont. They report earnings on the 30th. Let me double check that. Yep, on the 30th of this week. And we might see an explosion. If they take out $70, this thing could be going up to a new high. So watch out for NEM. Watch out for Virgin Galactic here, guys. SPCE. This one's down about 3% today, down 84 cents. I believe on Tuesday, on the 28th of this month. Yes, that's Tuesday. They're going to be showing the inside of one of their ships on a YouTube live stream. So that's going to be interesting. Maybe I'll make a video on solely that. Maybe we can, record my reaction or something. Maybe that could be a fun video to make and upload it just for, the SPCE fans out there and for my subscribers and out there, in the YouTube community in general. And I'm looking at this one, guys, down again 3% on Friday, down about 84 cents. Well, exactly 84 cents. And we can see it actually peaked at 27.50. So there's some margin that opened up there. I mean, this thing has dropped from its peak about 12%. And we're generally speaking holding a level of resistance from the, what day was this? The 17th of July. So if we're able to hold 24.50 and try and make a move back up 25 through 25, I can see this thing easily filling the gap back to 27.50. I mean, I have money aside for tomorrow for this particular trade. I'm watching for this to happen. If we see a gap up pre-market, heck, I might even buy a pre-market, right? So I'm watching a move up 27.50, and we've talked about it even above 27.50, guys. This thing could get up. The next level is going to be around $30. That's the next gap that we have to fill here according to this chart on the 4-hour chart, because we can see back in the end of February, and I remember, guys, back in February, I was trading this while I was in Disney. Back when things were normal, you can travel and be a normal human, right? I was in Disney. I remember in the park. That's when Virgin Galactic was going crazy, and I first got attention to it. And I was trading this thing, making money, and I'm just like remembering now. And back then, $30 was a support. We rallied out up from there up to about $36. So it was a support. We're under it now, making it a resistance. So from $27.50 up to $30, that is kind of where I'm looking for Virgin Galactic to end up going next. And a bunch of other ones here, guys, are Boeing, BA. We talked about they're also reporting earnings this week. They're reporting earnings on the 29th. That's actually on what? That's on Wednesday, guys. That is on Wednesday. Boeing's reporting earnings on Wednesday, and clearly here, they are trading in a range. If we pull up this 90-day chart, you'll be able to see it. They're pretty much trading within, let's say, $180 to about $170. $170, which we're actually getting close to at this point, has held as a support ever since the beginning to the middle-ish of June, right? Once here, twice, 3, 4, 5, and now it's going to be potentially the 6th time that we bounce out of there. So I'm actually interested in Boeing, although this is not the typical setup that I like to trade. I'm not going to lie. I mean, if we hold 170, this thing could slowly creep back up 180s, maybe back up to the 190s even, guys, and it heavily depends on earnings. We'll see what ends up happening there. I'm sure they won't do really well in terms of year-over-year growth. I mean, at this point, nobody's doing well. For the most part. And, it's going to depend on earnings. So if 170 holds, watch for that short-term play. I mean, I can see it bouncing back up if 170 ends up holding there. And another big company reporting is Starbucks here. Starbucks is interesting. I mean, we held 75, old resistance from a couple weeks ago as a new support. We rallied on Friday up about 0.5%. So I'm actually looking for Starbucks. My ultimate price target in the short term, at least, is going to be $80. And I think it should have no problem getting to $80. I mean, guys, it was at 77.5 literally 2 days ago. I mean, not 2 days ago. It was, when was this? On the 23rd of the month. So a couple days ago. And I think if it takes 77.50 out, I mean, the next point on this chart is around $80. So I think no problem. It should get there, especially if they show decent guidance, if they show decent earnings when it comes down to EPS and revenue. And one more that I want to call out here, guys, is Spotify, another one reporting earnings. We're seeing a decent drop. I mean, from $300 down to about $260. Ultimately, the uptrend here over the past couple of days is holding. Big resistance coming up at $270. So I'm thinking if this holds here, guys, and you can see it better on the 30-day chart. I mean, if this ends up holding this uptrend and we end up getting out of $270, I'm thinking we'd be able to gap up to $280, $285, maybe $290. So I'm watching that on Spotify. And you guys know I don't really short stocks. I play put options. I don't really short stocks the traditional way. But AMD, and again, do your own due diligence, guys, but AMD could end up being a decent short play. And not saying that I'm bearish AMD, but this stock is very overheated. I know they're reporting earnings, which can shoot them up even higher, but maybe a cool-off play could end up leading to a short play on AMD. Just an idea. And as I said before, I'm also keeping a very close eye on gold and gold stocks, silver as well, heading into this week, as they've just been doing so good, guys. They've been doing so well, rather. Let's be grammatically correct here on the YouTube channel, guys. So yeah, I'm watching, GLD, gold ETF. I'm watching SLV, which is a silver ETF, GDX, gold miners stocks ETF. This was up 2% on Friday. And yeah, as long as gold held $1,800 very well, rallied into 1,900 now. The next stop, as long as it holds 19, we might see a pull down, maybe 1850. If we do, we consolidate a bit, rally out of that. Ultimately, I think gold can get to 2,000. $2,000 is not too far-fetched at this point. And if it does, we're going to see a lot of these ETFs, a lot of these miner stocks explode. So that's it for this video, guys. If you found value in it, as always, hit that like button for me. Consider subscribing to the channel. And don't forget to claim your 2 free stocks from Webull. One of them is valued up to $1,400. All you have to do is go down below in the description box, click that link, deposit $100 into the account, and after a couple of business days, that is when you get your 2 free stocks. Practically is free money, guys. So thanks for the support. As always, I'll catch you all in the next video. Stay safe out there, guys. Peace out.